Welcome along to Trading Edge. My name's David Schirmer, and I'll take you through over the next few minutes just sharing some information about the stock market, my knowledge and experience. I've been involved in the stock market for about 23 years. I actually got involved by accident. I married some shares. When we got married, my wife had inherited some shares from her grandfather, and we had no idea what to do with them. In fact, our background's farming, and so we just let them sit there. And in the mid-80s, this company was taken over by Quintex, Christopher Skase. And so we owned some Quintex shares, and of course that was skyrocketing through the 80s, and we didn't know anything about the stock market. We didn't know how to trade or invest, didn't know anything about it. And in 1987 we needed some money, so we sold them. And it just so happened, it was totally by fluke, we sold them within 3 cents of the highest price they ever got to, before the stock market crashed and plummeted down and the company went broke. So that was the first time I'd made money without having to work for it, so I thought that wasn't too bad. So I rang a stockbroker and asked the stockbroker for some advice, and that was my first mistake. I called the stockbroker, and he said, buy a company called North Broken Hill Limited. He reckoned it was going to double in price in the next 3 or 4 months. So we bought North Broken Hill Limited at $3.73, and we watched it, to our dismay, plummet all the way down to $2.50 over the next 12 months. Finally, it turned around and started to go back up again. It got up to $3.75. We sold it. We made 2 cents profit, less brokerage. And then it went up. So we figured if we were ever going to create wealth in the stock market, it wasn't going to be from listening to a stockbroker. So I just bought some books and read some information and talked to people and bought shares and held them for a time, and actually made an okay profit. But in the early 90s, I was introduced to the futures market. They said you can make a lot of money trading futures, trading things like wheat, corn, beans, gold, silver, those sorts of markets. So I got involved in the futures market. What they forgot to tell me is you can lose a lot too. And I wiped my entire account out 3 times in the next 2 years. Lost a lot 3 times. And every time I lost money, I went back to the drawing board to see what I was doing wrong, fixed it up and continued to trade. And after 2 years of doing that, got to the point where I could make money out the market quite successfully. And that's really what I've been doing ever since, trading the Australian equities market. Also, I've traded options and warrants. I trade CFDs, contracts for difference, and the futures market, the world futures market. So what I found, though, is as I started to speak to people about what I was doing and people wanted to know how I was making money, I found most people have no idea really what drives stock market prices, what makes prices go up and down. And that's what I'll take you through really today, is an understanding of that, because I find if people understand what makes stocks go up and down, they can dramatically increase their wealth in the market. Most people think the stock market's a wealth creation vehicle, but it's not. It's actually a wealth transference. When you think about it, if you buy a stock for $5, you make no money out of that unless you can sell it to someone for more, do you? So if I buy a stock for $5 and then someone buys it from me for $10, where does the extra $5 come from? Their pocket. So it's a transference of wealth from one person to the other. And as I always show people, it's a transference of wealth from the ignorant to the well-informed. See, the interesting thing with the stock market is most people have no idea what they're doing. They buy shares and they don't understand what's going on. And the few people who do tend to make most of the money. And in the stock market, when a person with money meets a person with experience, the person with the money will get the experience, and the person with the experience will get the money most of the time.
I've been fascinated with the stock market for about 20 years, and like a lot of other people, been out there losing my money. So I thought it was about time I learned something really, so I could make some sensible decisions. Oh, it's been fantastic having the videos to be able to refer to as well, and then having the opportunity to be able to do the live program with David was terrific. So it's a combination of the two, which is very powerful.
So there are only 2 ways to make money with stocks. Buy and hold, or what I call buy and forget, is one. Now, over the time, I've spoken to more than 50,000 people, and most people buy and hold because they don't know where to sell. It's easy to do. In fact, people buy stocks and they watch them go up and then they watch them go down, and they watch them go up and they watch them go down. Now, overall, if you buy the right stocks, if you stick with quality stocks and you hold them for long enough, you will make a positive return. In fact, it's made around about 7% per annum in the last 17, 18 years. So a buy and hold strategy does work as long as you buy quality stocks and you're willing to be patient and leave them sit there. But to me, 7% per annum is not that much. It's not much more than what a bank will give you. But I want to show you something very interesting. This is simply a chart of the Australian All Ordinaries Index, the Australian market, over a couple of decades. And you'll notice something interesting. Back in the 80s, the market grew very rapidly. In fact, it grew over 500% in 5 years. But if you would have bought stocks at the very bottom of the 87 crash and held them for 5 years, you would have only made just on 18%. So here, you've made over 100% per year on average. Here, you've made just over 3%. Phenomenal growth. That's over 100% per year on average. Now, this is where the buy and hold strategy became very popular. You read many of the books around by the so-called experts, and they'll say you can't time the market, it's time in the market is important, simply meaning buy and hold. I want to show you that's not correct. It works very well in this type of economic climate we had back in the 70s and 80s. In fact, you could have bought almost any stock through there, held it and made money. Many people did. But it's very different in the current economic climate. If you would have bought shares at the very bottom of the 87 crash, when the buy and hold strategy first became popular, the market or the economy was what we call high inflation, high interest rate economy. You probably remember what interest rates were back in the 80s. Home loans hit 17%. Bank overdrafts got up to 23%. And when you have high inflation, high interest rates, it tends to be coupled with high growth in the stock market. Yet we go back in history, we look at the last 100 years, and what we'll see in the last 100 years is the market has only had 3 periods or 3 decades like that. High inflation, high interest rates and high growth happened in the 20s, the 70s and the 80s, which means 30% of the time a buy and hold strategy works very well. Yet most people buy and hold because they don't know what else to do. And so when we have what's called low inflation, low interest rate economies, the return has been in the last 17, 18 years about 7% per annum. We notice that when we have low inflation, low interest rate economies, markets don't grow as much, but they are more volatile, which means they go up and down more often. See, what happens is if we want to maximize a return, we can't just buy and hold as we did through here. You know, anyone could have bought shares and made money through that period. Most people did. Very different through this type of economy. What we've got to be able to do is know when to buy and when to sell. What we need to be able to do is make that profit, sell and not lose it again. Make that profit, sell and not lose it again over and over and over again. That gives us the highest return. Now people will say, well, you can't buy at the very bottom and sell at the very top, and I'm the first to suggest that's probably not possible, at least on a consistent basis. But what I want to show you is you can make 60 to 70% of the rise of all the quality stocks on a consistent basis. That has returned over 25% per annum in the last 17 years. Now that's a lot better than 7%, isn't it? I call that active investing. Very simply, I don't mean high-risk day trading, not looking at stocks every day, not during the day watching them go up and down.